For Wall Street Media, I'm Mike, I'm here with Doug, and we'll help you make money in the stock market with information you can't find anywhere else.
Hey, we've got fabulous stuff from Wedbush Morgan's California Dreamin'. Love Michael Pachter. What do you have for us?
For anyone that's interested, you can follow the full presentation by going to wsw.com/webcast/webbush7. First up, we have a video of Michael Malone, the CFO of Polaris Industries, ticker PII. He talks about their strategies to cultivate their existing markets moving forward and their possible markets they may be able to grow.
Well, do you know what? I watched him. I listened to him, actually. I wasn't fortunate enough to have fancy video like this. And they're doing a pretty good job, man. They've got a motorcycle brand now that's up to 3% market share, right? Out of nowhere, right? That's a pretty good start. And you know, when we go over to Garth, you know, they've got the four-wheelers, right? Yeah, I mean, you know, these guys are doing a nice job, you know, with the tough hand they were dealt, you know, where they used to be the snowmobile company.
Right.
You know, global warming.
Well, they had to do that, right?
Yeah, they did, but a lot of companies have had to, and a lot of them didn't do anywhere near as nice a job as these guys did.
Let's watch the video.
This is our strategy that we built, it's about 2 years now, a little over 2 years ago. We built this strategy to how we're going to operate over the 3-year period, 07, 08, and 09. And we've been employing this strategy of winning in the core, focusing on operational excellence and growth for a couple years. And frankly, the execution on this strategy is why we're outperforming our peers in a pretty tough economic environment. So it's focusing on our core ATVs and snowmobile products to get those business healthy by reducing dealer inventories and getting back some market share gains. Focusing on operational excellence to drive cost out and improve our quality and reduce the lead time of getting innovative product to the consumers. And then growth. And we've been focusing quite heavily on areas of growth that are more profitable for us than our core traditional products. Side by side, we've talked about the international market has been a growing and attractive market for us with higher margins, and then most recently the military sales. So achieving those objectives have allowed us to outperform in a pretty tough market.
I like them.
Oh, yeah?
Yep.
We have a next video. Gene Maida, the CEO and co-founder of Interperfumes, ticker IPAR, explains their plans for growth through the development of new fragrances for their existing outlets to carry and continuing to license out their brand.
So, how do we grow the business? We do not increase the point of sales. We have the same amount of doors this year and last year and next year. So our goal is to sell more products in existing doors. So for every license, for every brand, we come up every 12 to 18 months with a new fragrance. This year we launch the woman Burberry The Beat. We launch also the Van Cleef & Arpels Fiery and the woman's fragrance for Lanvin called Jeanne Lanvin. Next year will be the Quicksilver fragrance for men, the Beat for men, Paul Smith for men, Lanvin for men, where we signed with Rafael Nadal as our worldwide spokesperson for the advertising of Lanvin Sport. And we'll have a limited edition of products for Van Cleef & Arpels. Multi-pronged growth because we try whenever we can to extend into new categories. We will see a cosmetic line, a color cosmetic line for Burberry end of next year, beginning of 2010. We will see color cosmetics for Burberry. We have tested the water with men's skincare with nickel. And we use that. We use the nickel experience and the spas that we have as a lab for more important launches. Hopefully, skincare for Burberry. So we are growing also our business by signing new license or making new agreements with specialty stores. This tells you what we have done for the last 5 years. And the most recent development happened in the US, where we signed new specialty stores. But I will come back later to the specialty store US business.
Now, perfumes would be something that would be more Mike's area. So, what do you think of that?
Oh, it's great. It's just fantastic.
Guys, they're a good, solid company. We're just two idiots.
All right, we also have a couple of notes. Tim Reed, VP of IR for Dollar Tree, ticker DLTR, talked about the company's goal for 2008, which include capital deployment to build long-term growth by opening new stores, of which they have opened 201 through Q3. He also talked about their share buyback program. They still have a $450 million allowance for the buyback program.
Yeah, these guys are doing really well. Their chart looks great, right? Mm-hmm. Everyone thinks the world's going to end, and they've been a big beneficiary of that.
Yeah, good. Pete Collins, CFO of True Religion Apparel, ticker TRLG, talks about the expected continued growth of the brand through several initiatives with plans to expand their sportswear collections in their stores. Over the next few years, they are going to be opening more stores and plan to see most gains in the international market, especially in Japan.
Do you know what? I like True Religion. I think they have good management. They just opened up a store by me. It's busy. There are people in there. Do you know what? People are going to shop for certain things, right? Mm-hmm. But and they're going to cut some areas, right? But they're not going to cut everywhere, and they're not going to cut everything. And I think this is one of the things where they're special enough. Right. That women are going to say, Dad, you know what? I'm going to get a pair of my True Religion jeans, you know, and maybe I want to have Starbucks, you know, and then tomorrow that thought's gone and then
I
Starbucks
see that store in Soho, it's always full too.
Yeah.
I mean, their jeans are really good. I like them. Tony Crudell, CFO of Tractor Supply, ticker TSCO, explained their plan for their coming year. They will continue to grow organically by opening new stores in new markets as well as in existing markets through at a scaled-back rate to be conservative with their cash. They plan to continuing to take advantage of the fact that they function well in low-price real estate while they expand. They will also make efforts with interior design of stores to help experience more sales in existing stores. Gar Jackson, VP of IR for Pacific Sunwear of California, ticker PSUN, talked about the resignation of PacSun Division President Thomas Kennedy and the structuring of the team and brand based on this change. He also talked about their investment in PacSun.com. Online 2007 web sales increased 48% to 30 million.
30 million. What are our web sales? Chop, Jeremy.
It's all free, Doug. You're all giving away for free.
We're pay-per-views coming soon.
Tom Casey, EVP and CFO of Blockbuster, ticker BBI, talked about fixing the core rental service as they develop their digital content delivery service over the web. Mark Wolfinger, CFO of Denny's, ticker DENN, talked about their franchise growth initiative in which they are working to sell off some of the company's own stores to franchisees and through the third quarter of 2008 have sold 192 stores to over 40 franchises.
Oh, wow. I didn't know they were doing that.
Yeah, I didn't either.
Hey, maybe I should watch the show.
Well, that's all we have. We're here every day at Wall Street Media. Don't forget to check out Stock Twits.
Right. Great traders. If you're a trader, you're going to get to see great traders. And it's a constant live feed telling you, it's free, and telling you what they're doing right then and there.
Okay, great.
Yeah, fabulous.
Also, check out Covestor and Investopedia if you are not familiar with some of the terms here and the investing terms. We're here every day at Wall Street Media. You can find us directly at wsmco.com.
Thank you, Jeremy.
Thank you.